Hey everybody, it's Pete. Good morning. Welcome to today's episode of Stock Trading Pro. In today's Stock Market Live, we're obviously going to talk about the big dog today, which is the Amazon stock split, the Amazon 20-to-1 stock split. I'm bringing a book out of my archives today to talk about specifically for stock splits. We're also going to talk about the Amazon buyback. We're going to get a little bit deeper into that. Got a couple of stocks that reported earnings, one that is going straight up, one that's going straight down. We'll pick both sides of the market there. And I'm also going to get into this a little bit today just to give you some full context. Obviously, we're going to review the market, but we're going to get into this spreadsheet again here today. What I'm trying to do every day is I want to give you structure. That's really one of the biggest things. When you look for the best stocks to buy now, the single biggest thing that you should strive to do when you're in the stock market is be prepared before the market opens. I know we got really fired up about that yesterday on yesterday morning's Stock Market Live, but I want to keep giving you templates. I want to keep giving you some outlines. So you're going to have the ability to download this template in just a second. I'm going to give you the instructions on how to download it. So stick around. We have a lot to discuss today, so stick around. We're going to answer all those questions for you in just 1 minute. Okay, so thank you so much for joining me here, everybody. I really appreciate it. Obviously, everything that we discussed today is for educational purposes. We're going to start out with the first thing, the big dog, the Amazon stock split, which depending on where it opens up today, 20-to-1 stock split is going to bring the stock all the way down towards the $135 to $140 stock price level. Significantly different price action when a stock hits different levels. We actually saw, and I'm going to pull up a different stock to get into that I want to show you, which is this one here, TTD. The stock split in TTD that happened last year, the stock was trading close to $600 up in this area here, and the stock really hasn't done much since then. You can see that it was kind of on fire and trading really well. I know this was part of the pandemic, but the stock was one of our top stocks that we were getting involved with simply because the order flow from one day to the next was very, very easy to follow. It was by far one of the easiest stocks to buy now and then, actually. So what we want to do is we want to put together a trading game plan based on the Amazon stock split and how we expect the price action to unfold before and after the stock split. We're actually having a pretty decent conversation right now in our Discord community about whether or not you should buy the stock before or after. I'm personally going to wait for the stock split to have a little bit more share size. And then getting into this is one of the oldest books that I have. It's actually from 1999. And I don't know if you've ever seen this book before, but Wall Street Money Machine. The reason I'm bringing it up is there was an entire strategy that was so popular back in the 90s and early 2000s. This is actually, can you see it? That's the book. Wade Cook was actually one of the top financial educators back in the day. A lot of people were inspired by what he did, but there was an entire strategy that was, quite frankly, really easy to follow back then. And this is all after during and after the dot-com boom, especially, which was selling puts on stock split companies. There was a certain percentage back then. There's, again, everything here is for educational purposes. Basically, as a stock split, after the split, the strategy was to sell puts below that, expecting the stock to start to rally back up. And that's actually what a lot of people see and expect to have happen. At the very least, you don't expect the stock to go down based on the multiple reasons for the stock split in the first place. But this one has actually some extra juice. And I want to show you that right here. So obviously, the stock split is the big thing that everybody's talking about, the 20-to-1 stock split. So if we do the math, it comes out to somewhere. But this actually is the one that's the most interesting to me. The $10 billion buyback on the Amazon stock. So what exactly does that mean and what will happen? So we've kind of used the analogy of quantitative easing, that there was always a bid under the market. And obviously everything that we do in the market, we are looking for order flow. We're looking for smart money to step in, hold the bid, and pay higher prices because they believe the future cash flows of that company at the current stock price are undervalued and they're buying tomorrow's cash flow. And we actually have two different companies today that we're going to show you what earnings just came out and how the earnings that were reported and how the stock price reacted to that and why. That's actually the big thing. But when I'm talking about order flow, if you happen to be new to the channel, I want to give you the full context. First, if you're new, thank you so much. I really appreciate it. If you're brand new, make sure you hit that subscribe button, because these are the kind of things we talk about every day. So what I'm talking about is the order flow. And as I mention here every day, this is how I track the order flow for our community. So when I do the game plan at night every day, I run through about 2 hours worth of game plan of scans, go through technical analysis. I look at financials, and I come up with a list of stocks to trade. But then I also have a bigger list of stocks that meet criteria. So I'm doing the scans. I am literally providing the list, and I am providing a whole separate list of stocks that meet the criteria. Then each member inside of our boot camp needs to go in and figure out which stocks meet your personal criteria. So when I'm talking about order flow, I am looking for buying pressure right now. We're not going to talk about the short side of the market or short selling stocks. That's a whole other conversation. So right now, what I'm showing you on the screen are stocks that have order flow, smart money buying, where they held the bid from one day to the next, 1 week to the next, and they're paying higher prices. So this list here, if you want, you can take a snapshot of it, but I'm going to give you, you're going to be able to download this today inside of our trading group. So let me just show you the list. If you want, you can take a snapshot of it. So again, for order flow, we're looking for this is order flow for March. So this is from the first trading in March. This is from this Monday's price action. You can see we got a couple of other stocks that have popped up in this list recently. And this is 2 weeks worth of momentum. So order flow is from a reference point. Momentum is from a time, which is kind of cool. So we're actually what we call OFA, which is our order flow assessment. We always teach everybody, you want to hit the order flow from multiple angles, because you start to find ideas that pop up just simply because you looked at order flow differently. So 2 of the order flow assessments that I just showed you from the month and the week, those are based on a specific date. The other order flow assessment is based on a rolling 10 days of trading. So why am I telling you all this, right? It really comes down to this. There's a lot of people that are frustrated right now with the market, and especially in the big picture of the market. And I'm going to tell you why. If you've ever wondered why it seems like some people always make money in the stock market, but you can't get to the other side, there's not even a question in my mind. It comes down to understanding how to track the order flow. And number 2, understanding how to create a game plan of stocks that you literally script out for what to do. You conquer those 2 things, order flow, game planning, then the market becomes a lot easier, because it's no longer confusing to you, because you're literally just sitting there saying, okay, I know exactly what I'm looking to do. So how does this all tie back to the Amazon stock split, and more specifically, the buyback? We just spent a little bit of time talking about order flow, which is buying pressure under the market. In this case, bullish order flow, which is buying pressure in the stock market that holds that stock price up, or even creates higher prices, because whatever that price is now, they believe, the smart money believes, that it's worth paying more because of where they think it's going to be in the future. So we can actually work our way over into a couple of the other stocks that reported today. CrowdStrike was one. The symbol is CRWD. So we'll just take a quick look at that one. And we're going to tie this all back into the buyback, because it's a big deal. So you can see here, it's actually up $189.50. It's up $19.11. So it's actually all the way up in this area right now. So right in that area, maybe just a little bit more than that. So again, I'm going to give you the strategy. This is really one of the biggest things. It's one thing to have a gap, which this will be a gap. And that's, by the way, that's actually trading language that a lot of people get wrong. We actually had a conversation about that yesterday. Far too many people call a higher opening a gap. It's not always a gap. A gap needs for a stock price to trade outside of the previous higher low. So if this is yesterday's price action and a stock closed here but opened here, that's a lot higher, but it's not a gap. A gap means it opened here or opened here outside of the range. So make sure you say that correctly the next time you're actually talking about a gap. And especially, somebody mentioned it in Discord yesterday, and everybody was like, no, that's not a gap. So we had a discussion about that. So CrowdStrike, based on the current cash flow of the company, the earnings, the guidance going forward was very good. So that's the language that you want to hear. Maybe we're getting a little bit into trading lingo today. The guidance is what you're paying for. You're not paying for what it did. You're paying for where it's going and what they expect to do. So CrowdStrike earnings were actually pretty darn good, and the guidance was good. So you can see the stock is trading higher. Now, it's still within this box, which is basically going back to the start of the year, but that's a pretty darn good move to the upside. The other side of the market is Asana. Okay, Asana is a project management company. The stock tumble, the company is warning of larger losses. So Asana reporting, and their guidance was not good. So this stock, you can see, we actually traded the heck out of this stock here late last year. But since then, it's mostly been bearish order flow. Now the stock is down 25%, and it's literally down here in the 36 level. Now, what's kind of interesting about this is we're at 36, and we're kind of right at that support level again. So if we go down just a little bit, this is going to be a big level for it to hold. But here's really the big thing. We're going to tie all this back together. We're going to bring it back to what this book means in reference to the Amazon stock split, what it means for the stock buyback, but using those two stocks as an example of where they believe the stock will be in the future, and tie that back to potential trading ideas with the Amazon stock split. So CRWD, CrowdStrike guidance going forward was good. The stock was in bearish order flow to neutral. The cash flows going forward are perceived as improving, which is why the stock is up so much. Asana, ASAN, also pushing down and sideways. The guidance was not good. And this is the language that we actually tell everybody every earnings season, is you need to pay attention to what was expected and what actually happened, and then what do they expect next. So it's kind of expect, happened, and then expectations. So if you read the headline, and this is the super easy way to read these stock market headlines, is the warning. The warning means is what they expect to have happen next. Forecast. So forecast is basically their expectations, expected results. That's what you're looking for. We get so many good questions about, hey, Pete, I don't understand. They beat the numbers, but it was supposed to do 1 million or 1 billion, and they came in at 1.1 billion for the quarter. So that should be good, right? They did better than expected. The raw number is not what we're looking for. We're looking for percentage growth. That's the big number. So if we're looking at the guidance going forward and putting that percentage growth in, what's the percentage growth of revenue? What's the percentage growth of earnings per share? That's what we're looking for. So if you're confused about that, that's what people watch. They're looking for the growth percentages or the decline percentages and what that means, which is also why you might see some stocks that, and there was a lot of them in the last year and a half, that still lost money. Their earnings per share was still negative, but they lost less, which is technically perceived as improving stock performance or potential stock performance for that company. Thereby, the losing less is actually perceived as good. So we're going to tie this all back into Amazon and the stock split. So the stock split is important. Obviously, we can have discussions about when you plan to buy that stock, and is Amazon the best stock to buy now with the stock split, or wait for after it. But to me, the stock buyback is kind of the rocket fuel underneath that bid, because the stock buyback, there's probabilities of what will happen. And again, the chapter in this book, if you didn't, I don't know if you can see it better over here. There's an entire chapter on selling puts on stock split companies. So just the very function of a stock split has a perceived value of that's good for the company's stock price. When you add a stock split plus a $10 billion stock buyback, you got a lot of argument there saying that I really believe that the stock is going to split and then just kind of head back up to the upside. There's two different groups of people now that are looking at the Amazon stock split, which is the people that are looking at the split, expecting it to hold, but then the people looking at the buyback saying this is great for the company. They're allocating shares. There's two ways they could do it. They could give dividends, reinvest it, actually three, dividends, reinvest back in the company, or buy the shares back themselves. And that's three ways the shareholders will benefit from that. So it's going to be pretty interesting as this unfolds. That's how I'm looking at it. That's how I'm game planning it. So I want to walk you over after that now So actually, it's interesting. I saw a couple of people post about the Amazon charts and the trading range and all that kind of stuff. When you get significant news like this, it kind of overtakes the just the charts themselves. So I want to talk about this now. This is the game plan and the research, because we're always coming in here every day saying, what are the top stocks to buy now? How do I find those top stocks to buy now? I just gave you a little bit of a breakdown on the criteria. So I just want to show it to you again, because if you want to download this sheet, it's going to be available only for a limited time, but it's my spreadsheet for today's price action. So you definitely want to get it today. In the description below this video, you'll see a link to get into our free trading group. Just click the link, get in there. Fill out your name and email or whatever it asks you to do, and download this. The reason I want you to download this is because I want to help you with the structure. When we have new people come into the boot camp, by a mile, the biggest thing it's an epiphany, a revelation, like the biggest life-changing thing for them is nobody understands how to do game planning. Everybody thinks that you just run a scan and you go and you like, oh, there's 5 stocks and I'm just going to go buy them tomorrow. That is not what game planning is. Game planning is recognizing the market. Game planning is the sector. Game planning is the group. Then you go into the individual stock, and then you determine your entry price, your stop loss, your target, your initial profit target, and your plan for if it opens higher or if it opens lower, and what you plan to do. Then how you script out when it hits your profit target. Then you shift over into what we call profit maximizer mode. And then you see how much more available is in the trade. You never want to limit what you could make on the trade, but you need an initial target to accept the risk. Think about that. If you have no idea what a realistic profit target is on the trade, if you have no idea what is realistic that you could make on the trade, and you are just simply taking risk without having any idea whether or not it's good. So in other words, you might be risking $3 to make $3 on the likelihood of that trade. That makes you a one-to-one trader. A break-even trade is going to make you a break-even trader. So if you say, again, raise your hand, how often were you making money, losing money, making money, losing money? You have a big win and then a big loss, and you end up at the end of the month where you feel like you had a lot of good ideas, but you just didn't make any money. That's because you, as of right now, you don't have the skill set or the structure to build out the idea where it says, okay, I understand where the stop loss is. I could look at the chart. I could see the stop loss, whether it's a percentage or a place on the charts. Now you need to go to the other side and say, what are the likelihood of this stock moving higher, and what is the most likely price that it could go to? So if you just think about it, even if you think about like a real estate deal, if you put money into a real estate deal, a $10,000 down payment, but you can only make the same out, it's not really a great deal. You're risking one to make one. You need you need multiples of what you can risk. So again, going back to the Amazon stock split and the stock buyback, if we have in our mind now what is the risk on this trade based on what is likely to happen next. And we actually had a really good question yesterday about how do I have so much confidence that a stock is going to go higher? Again, if you missed yesterday's call, make sure you hit that subscribe button, because we went into it a lot of detail. I said it's not the confidence of each trade going up that I have. I have absolute confidence that over a large sample size of trades, so let's just say 10 trades to keep it small, I have a lot of confidence, a massive amount of confidence that over 10 trades, maybe over the month, 10 trades over the week, if you're an active day trader, over 10 trades, I have massive confidence I'm going to get follow through. As long as I keep my losses reasonable, and what I'm talking about now, have a high expectation of my profit target being hit, and I only risk the right amount for that initial profit target, that's when you really start to have something. That's when you're cooking with gas. That's when trading becomes really fun, because now you are only accepting risk on trades that you have a high likelihood of making money on, at least in our case, 2-to-1 or 3-to-1, depending on the market conditions. Right now, we're a little bit more towards 2-to-1, but then 3-to-1. If you hit 2-to-1, you shoot 3-to-1, and then you shift to profit maximizer. Now, that sounds like a lot, right? So, oh my God, that's so confusing. I don't have the time for that. It's simple, okay? It's simple. First, you need to understand how to scan for order flow and set up ideas that have a very high likelihood of following through. how do you actually set up ideas where currently over 1 month, over 1 week, over the last 2 weeks, how do you set up ideas that have a high likelihood of going through so that when you accept risk on the trade, when you accept your stop loss, you're like, you know what? I'm okay with this. If this thing goes up, I understand how to manage it. You know what, though? If the stock goes down, I'm also okay with that. It would stink. I don't like it. But what business in the world can you run that you don't have expenses? It's the silliest thing I've ever seen in my life that stock traders, for some reason, believe that you shouldn't ever have a loss. That is the silliest thing I've ever heard in my life. And also one of the biggest things that I teach in the boot camp from the first day. You will have trading losses. I will have trading losses. You know why? Because we trade in the real world. We're not talking about, I never have a loss. Get all that garbage out of your head. As long as you understand you're running a business, as long as you understand while you're running that business, your job is to keep expenses low while you understand how to get more profits. That's how you run a trading business. The problem that most people have, maybe you, I don't know, maybe you, the problem most people have is they only look to see how much they could make, which is aspirational, but they don't look at the downside and they don't have any structure to determine which stocks have the highest likelihood of going higher that they choose to buy. So if they look at a list of what they believe are the best stocks to buy now, how do they know if they go out to the stock market and say, this is the right risk based on the probable reward? If your trading is going back and forth, back and forth, back and forth, or even worse, you're losing money, it just means one of those couple of things you just need to understand a little better. That's it. How to make profits, how to accept the right risk, and how to find stocks that have a really high likelihood of going higher. So this list that I'm showing you right now, you can download this list today. So then you could take these stocks, go into the charts and see what I'm looking at. Maybe you can start to understand order flow just a little bit better. So when I'm talking about this right now, order flow over March, order flow since Monday, order flow over the last 10 days. Then you'll have access to this. You can go in a little bit deeper and you can see how sector rotation has unfolded this week. You can see that the picture is not that great over the last week, but it's certainly improved from going into Wednesday to going into Thursday. So now how do you attack this list? This is really where it gets super cool. You'd be like, okay, that's awesome. From yesterday's list, technology, 4.37% led the list of stocks from yesterday's performance. So that's great. What do I do with that, right? So now you go into the top technology stocks and you say, now with everything I just talked about in mind, which stocks have the highest likelihood of following through to the upside in the technology sector after yesterday's price action? Now, we want to stack the order flow. That's the biggest thing. Remember, stacking the order flow means that you are building the argument that there's a strong likelihood that if you accept the risk, a strong likelihood of it moving towards your profit target, your initial profit target. Now, I'm telling you, if you're finding trading stressful right now, what I just said 4 times is something that most people forget like that. I said strong likelihood. I did not say every single trade is going to work out perfectly. As a matter of fact, it doesn't need to. It does not need to. As long as you understand how to run a trading business, which is what I'm sorry, I'm pointing because I'm getting really excited. As long as you understand how it actually works to run a trading business, it's finding order flow, accepting the right risk. Order flow means probability of moving in that direction. Order flow, accepting the right risk, understanding how to set the right profit target, and then allowing the trade to play itself out. Trading can be that simple, but you need to learn how to put those pieces together. And you need to, quite honestly, if you really want to take it to the next level, be with me and understand how to do that on a daily basis, because I literally give you all this every day. So that's the sector rotation. So we just looked at sector rotation and we took a look at technology. So technology was strong. So now I'm going to give you the next step. So if our sector rotation analysis says that technology is strong just from yesterday, that's only one day. It's not across the board. So what does that mean? Not across the board means that it's only yesterday. You can see the week and the month are not strong. So what we're looking at here is something that has a little bit more strength. So energy, we know over the last month has been strong, but yesterday it wasn't. So then we hop on over to basic materials. So you can see they're strong for the month and they were strong yesterday and kind of neutral for the last week. So now we're breaking down the order flow within the context of the market. So now we know basic materials was strong yesterday and strong for the month. We know technology was strong yesterday, but not for the week and the month. So let's get into creating a game plan. How do we create a game plan in those two scenarios? Basic materials has strong order flow for the last month. So that means that those stocks are most likely already in bullish uptrends, already in bullish order flow. So that means our expectation for follow through would be a little bit higher. So instead of accepting risk on 2-to-1, risking 1 to make 2, in this case, because we have existing order flow in a little bit longer time frame. And again, remember what order flow means. Order flow means smart money stepped up and paid higher prices. How do we know that? On the charts. They're literally doing it. The charts are the cash register. If, again, we talk about this all the time in one of the older books that we mentioned quite a bit, which is Tape Reading and Market Tactics. He gives a great example of where you have to imagine that these are jackets being bought. He bought one jacket at $20, but somebody bought 500 jackets at 19. So there's a lot more demand at 19. We know what the smart money is doing. We don't care who they are. We just know that somebody stepped up with price action and the stock price held the bid or pushed it higher. So I want to get back to this right now. This is really important. Okay. So getting into this, you can see that technology was only strong yesterday, but not strong here. Basic materials was strong yesterday, strong for the month, and kind of neutral, slightly negative yesterday. So that means there's a higher likelihood of basic material stocks following through. So that means the game plan would game plan for a little bit more reward potential if we get follow through. That means the game plan for technology stocks, because they were only strong yesterday, would be a tighter reward potential as an initial reward in exchange for that risk. So now the idea is, well, how do you go and find those stocks? Well, I'm giving you that as well. So you got to get into the trading group. So now you go over to this tab over here on the bottom, and you'll see I give you the list. So you go into the technology stocks and you see here basic material, first basic material. You take this list of stocks, then you go into the charts and you look from 1 day to the next, 1 week to the next, 1 month to the next. How long have these stocks shown bullish order flow? Is it just 1 day? Is it 1 week, which represents 5 days? Is it 2 weeks, which is 10 days? Or is it a month? Take that list of basic material stocks and say, which of those stocks do I think have the best risk reward right now? Then you do the same thing in technology stocks. We work our way over into, again, you're going to the bottom tab over here and you scroll down and you go to technology. So I'm literally walking you through how to set up the list. So you have this big list of technology stocks. Now, one of the big things you need to consider is what are the right stocks to trade for your current resources. So that's why in this list, there's also the price. You need to determine which of these technology stocks meet your current risk and resources. So I'm giving you the entire breakdown now, but I'm trying to inspire you to understand that there's a higher level trading. There's more inside of you than you probably realize right now. And sometimes it just takes a little tweak to say, I never knew that before. I never considered that, yeah, I'm running a trading business. What business on the planet has no expenses? Of course, I'm going to have expenses to run a trading business. As long as you understand keeping your trading losses reasonable while you're around long enough to understand order flow and set profit targets and the likelihood of hitting those profit targets, that's where trading becomes fun. That's where trading becomes exciting. But here's the most important thing. And this is by far the biggest thing that people who come into our training program, again, not selling you, but if you want to learn about it, click the link in the description. Understanding the feeling of control that you have over the outcome. Isn't that really why we're all here in the first place? Isn't that why we're here? We want to be the reason we make money. Everything I'm walking you through right now is obviously just a tiny sample. I'm not giving you everything because that's what people in the boot camp are getting. But I want you to understand that if you're frustrated right now, there's something missing. There's something between that perfect picture of what you believe the stock market can give you and your current knowledge and your current skill level. And I want to say this very clearly. Understanding what to do and having accountability to do it, it's not the same thing. Because we all know, like, we should eat right and exercise. That doesn't mean I do it. Trading's the same thing. You could know everything about technical analysis, but not necessarily understand how to trade. There's a difference between technical analysis and being a profitable trader. So what we're talking about now and what's on these sheets right now. So again, I'll just walk you through. Earnings is on the first tab for the week. Sector rotation is on the second tab. And these are all the sector rotation heading into today. These are the top stocks that meet the perfect criteria heading into today. Here's the list of stocks that have order flow over these different time frames. And then over here is the list of stocks in the sector. So we just covered a lot of stuff today. Honestly, I would strongly recommend you go back and watch this video one more time. These are instructional videos on top of giving you ideas for how to be a better trader, how to think like a trader. There's a big difference how successful traders think in the stock market from everybody else. Just think about two things that I said that I want to leave you with on today's video. Okay. Number one is accepting the fact that you will have trading losses. And the sooner you accept that and accept the fact that it's just a matter of sticking to getting out to the trades that aren't working out, that's a big part of it. Number two is understanding that order flow is everything. Once you understand order flow, and specifically if order flow is obvious, then you're setting up ideas that have a high probability of moving in your favor. But remember, probability means most of the time, not all the time. So if you accept the fact that most of the time means sometimes it won't, and you kick those losses out, you're going to be in good shape. But once you understand order flow and what a good profit target is based on the order flow and what the stock normally does, here's the most exciting part. Then you know what the right risk is. Because if you know what the likelihood profit target is and the likelihood of that happening, then it's just a question of saying, okay, I know what I could make. What's the right risk for that idea? Think about how much less stressful your trading could be when you just put those simple pieces in place. What's the right risk based on where I think it can go? That's where trading really becomes, you're the reason you're making money. Not because of quantitative easing and all the other stuff that's going on, simply because you understand what you're doing. And that's a skill that you will have for the rest of your life. So if you want, you can download this spreadsheet. And I honestly, I hope you do. There's two links below in the video. First, I want to ask you for a favor. If this video is valuable to you, and I really hope it was, because I really try every day to give something that maybe you haven't heard before, or maybe just say it in a little bit different way. Please do me a favor. Smash that subscribe button so you get updates, so you know that when new videos are coming out. And if you found this particular video valuable and informative to you, do me a favor. Smash that thumbs up button. If you want to download this spreadsheet, which I really hope that you do, click the link below the video and go into the Facebook group. It's our free Top Trading Pro Facebook group. There's no cost. There's 1,500 traders just like you in there right now. Share your trading ideas. Get in there and talk. No cost. Just go in there and take a look, and you'll be able to download it. So it's actually pinned to the top of the Facebook group. If you want to come and trade with me, where you get all of this, where I'm actually giving you everything I'm doing every day, also click the link down there, and you'll see it says Learn to Trade Stocks. You might find this for you. You might not. Either way, I want you to know how much I appreciate with you. It's 8 o'clock in the morning. We have a ton of people on with us every day. I really appreciate it. I look forward to this every day. I hope that you do as well. So I have to head on out, go to our other meeting. Click those links below. If you have any comments, definitely leave that below the video as well. Have an awesome day, everybody. Thank you so much. I really appreciate it.